Thanks everyone for joining me here today. For those of you return viewers, it's great to have you back. And for those of you new to the report, thanks for finding me. And here's a quick overview of what we'll cover today. I'm Chris Halstead, Managing Director of Sales for Brown Harris Stevens, Connecticut, and each month I provide you with a quick overview of what we've noticed happening in the Lower Fairfield County real estate market. Now, if you can believe it, we're already through March, so today, rather than recap the month prior, I'll focus on the broader trends we realized through the first quarter of 2026. But before we get to the numbers, I have the incredible privilege of introducing you to one of the most remarkable shoreline opportunities ever offered in Westport, 4 Sherwood Island Lane. Our powerhouse agents Andrew Whiteley and Wendy Ryan just listed this 20-acre waterfront estate in the highly sought-after Greens Farms neighborhood for $15 million. Boasting unparalleled views out over Long Island Sound and Sherwood Island Park, this private oasis offers scale and atmosphere seldom found in Westport. Hidden along a private lane and currently comprised of a collection of residences thoughtfully positioned across the land, the estate has been enjoyed by the same family for over 65 years and has served as a true family compound where generations have gathered. Whether preserved, enhanced, or reimagined, this once-in-a-generation opportunity to shape a legacy estate. Please be in touch with Andrew and Wendy for more information. This is not one to miss. Alright, now I know it's a tough act to shift from a beautiful property like this into numbers and statistics, but I'll do my best. To kick things off, and if you've been watching me for a while now, this will come as no surprise, lack of inventory across our 12 towns has been the main storyline for months on end. I mean, really, it's years at this point. The first quarter of 2026 showed no evidence of bucking the trend as we continued deeper into record-breaking territory. Active house inventory across the first quarter fell to its lowest recorded point when compared to the same quarter historically. To put that in numbers, as of the end of March, listings have fallen year over year for 7 straight years, marking 3,490 in 2019 down to just 517 this year. When compared to last year and across all price points, inventory was down about 15%. Interestingly though, the segment of the market hit the hardest were homes under $2 million, where inventory clocked in about 22% down from a year ago. Now before we move on, I want to speculate on this a little because it is a trend we've seen growing for some time now. I have a couple thoughts on why this might be. You could argue that home sales under $2 million are down because in that price bracket, fewer people are deciding to move. Why? Well, it could be that a higher percentage of homes under $2 million are financed and a majority of owners under the threshold are sitting on mortgages they're not willing to walk away from or frankly can't afford to when considering what impact a mortgage today would have on their monthly out-of-pocket expense. I think that's a very realistic conclusion to draw. But I also think there's something else going on. With average and median sale prices on the rise for years on end now, consistently pushing new record highs, there are actually just fewer houses that fall under the $2 million mark than there once were. These towns are getting increasingly more expensive, dragging affordable inventory and closings down, while we're actually seeing big jumps north of $2 million. Let's look at some numbers to back this up. Closings under $2 million fell 12% when compared to Q1 25. Home sales above $2 million up 12% over a year. Pending sales as of the end of March tell the same story. Under 2 dropped from 276 last year to 229 this year, while pendings over rose from 136 to 161. I mentioned median average sale prices earlier. No surprise, both hit their respective highest recorded number for the quarter. The median sale price for Q1 clocked in at $1.35 million, while the median asking price of current contracts signed headed into the start of Q2 are well above that mark. But the average sale price is the real indicator. For the first time ever, the average sale price for the quarter cracked $2 million, and not just by a little. We closed the quarter at almost 2.2. To put that in perspective, that number was hovering around 1.6 in 2024 just 2 years ago. Now, for those of us who have been riding this wave up, this is incredible news. But for those trying to get in, the barrier of entry keeps getting steeper. With prices on the whole rising, we're also seeing big jumps in the luxury market. And as a quick reminder, we had to up what was considered luxury to north of $5 million from $4 million a while back. There were 42 house closings over $5 million in Q1, another record, and 11 sales over $10 million. 8 in Greenwich and 3 in Westport. That's up from 9 last year and only 2 in 2024. Buyer interest and intense competition continues to fuel the market. Despite our dearth of inventory, buyers swirl en masse. Best and final offer deadlines, buyer waiving all contingencies, cash, committing to a lightning fast closing are all commonplace. In Q1, 65% of all house closings were above the asking price, as well as 71% of condo closing. Days on market officially came in at 26, but I don't think that accurately depicts the market. Short of the long, if you don't see something within days of it coming on the market, it'll be gone before you have a chance to step in the door. I know I'm running long here, so I'll wrap it up quickly. Touching on mortgages, the 30-year fixed mortgage actually jumped up in March, hitting a 6-month high. While we had seen numbers hovering around 6%, global uncertainties spooked the markets, and we finished March in the mid-6s. I don't know where we're headed, but instead of many predicting Fed rate cuts in 2026, there's now a real possibility we may see a rise before the end of the year. So this is definitely something to keep an eye on as things progress. All right, we made it. That wraps up all things Fairfield County for the first quarter of 2026. I think we're gearing up for an interesting year ahead, so make sure to tune in again next month. As always, thank you for joining me today, and please don't hesitate to reach out to me or one of our incredible brown hair Stephen agents with questions along the way. For more in-depth market statistics, please visit our Mastery of Connecticut webpage, where you'll find all of Brian Cleary's town-by-town reports. Thanks again, and I'll see you next month.